Hello and welcome to Currency Call. I'm Manisha Gupta. Well, let's get across to the guest then, and Abhishek Goenka, CEO, India Forex Advisors, now joins us for his views on all of those currencies. Abhishek, hi, welcome to the show. Let's start with Indian rupee first, and it started on a negative note, but 44.80 kind of levels are holding in the markets today.
In case of Indian rupee, quite a zigzag session we have seen in the last few days. I personally feel that, rupee fundamentals are deteriorating a bit, in terms of both political and financial problems are rising in case of India, and post QE2 that's probably going to end in June end. Probably, we are going to see some outflows coming from the emerging markets, and then US dollar might be getting a little bit stronger. So I guess these are good levels for the importers to actually go long for the exposures, maybe for this month and next month. And for exporters, I think 45, 20, 30 is a level to watch. I think that is a level that should be available in the market maybe another 15, 20 days.
This week did see a high of 44.59. Do you see that one coming, or you think the...
I think that's the bottom, I think that's already been made, and I think this is good levels to go long US dollar.
How do you look at the euro? Because on one side there are the Greece problems which have continued. On the other side there was ECB speaking yesterday that July might see an interest rate hike. So you think that really is factored into the currency right now, and how would you trade it?
Yeah, I think the entire expectations of the hike next month is kind of factored in the market now. The European majors, the Greek problem which is actually going right now in the market, this problem, the deadline is maybe I think mid of next month. Till that time I don't see the problem actually going through. So I think euro would be slightly weak. The levels that we have seen and witnessed in the recent past, maybe 47, 48 levels, I don't think that we are going to see these levels again in the coming 1 or 2 months time. I think euro will take a structural shift after the QE2 post June, and dollar would get a little stronger. So I would probably go cover my euro exposures at the current levels.
You of course mentioned, sure. You of course have mentioned that you look at a stronger dollar, but what kind of dollar index are you viewing? And especially as you mentioned the QE2 ending in June, how do you see July really opening up for most of these currencies?
See, if you go back and look at 2010, between QE1 and QE2, there was a strong outflow of money from the stock markets in the US. Similarly, when we go out from QE2 to QE3, this time the similar kind of a fashion could actually happen in India also. So, post June, I think that the US dollar should get a little stronger, and euro should look at levels of 1.4142 levels, and dollar index should hit towards 76 plus post June, I guess.
Just coming back to rupee, if this is what is going to happen in the international markets, what's your sense on how could it impact the Indian rupee? You've seen the IIP data today, the domestic markets, there is this interest rate hike also incoming maybe by June end. In that scenario, how do you see rupee ending for the June?
If you see the recent market phenomena today in the stock markets, the market broke out of the range. Now that breaking out was not something which was looked upon very positive by all the traders and the market players. Now that is something which is showing that the stock markets are getting weak. Now I think that post June, in the June end, that time I think the stock markets would be a little weak. There will be some outflows, and the political scenario which is actually happening in India is something which is not very good. So I guess June end, I think the levels we should be looking at rupee should be something 45 plus, 45, 20, something like that.
All right, so another 50, 60 paisa of a decline from these
maybe more,
levels.
maybe more.
Maybe more, okay. How about the commodity currencies now, Abhishek? Because those were really the gainers during the day today. While there have been these, pull between the risk appetite and the risk aversion stories in the market, but commodity currencies overall have done quite well.
The commodity currencies were actually going up because of the cheap liquidity in the US, which was actually going towards Australian dollar, New Zealand dollar, Canadian dollar and all that. Now the commodities, if you see in the recent past, there has been significant corrections in most of the commodities. In case of the Australian dollar, there has been some concerns from China. New Zealand is also not looking too good. As for the currencies, I think the currencies which look strong to me at this point in time is Singapore dollar, the Korean won and the Malaysian ringgit. These three currencies are the currencies which are supposed to be bought now, and these three currencies, Australian dollar, New Zealand dollar and Canadian dollar, somehow we are not feeling very sure about the up move in these currencies. We feel that post June, July, I think once the cheap liquidity, when the yields start increasing in the US, then I think there will be some more correction, and we're going to see levels of 1.0203 in Aussie or maybe low, and similar kind of movement in other currencies. Obviously, the Swiss franc is something which is I think is going to be a little different. The Swiss franc and the Japanese yen. Now, Japanese yen, I just wanted to mention that it's almost close to that 79.75 levels now, and I think this time probably 79.75 levels could break, which most of the people are watching for. So I think they are going to trigger the stop losses this time, and it might head towards the 78 this time, Japanese yen.
All right, Abhishek, we'll let you go at that. That's interesting take coming in from Abhishek Goenka, CEO, India Forex Advisors, on Japanese yen, Indian rupee and Singapore dollar is a place that he would want to park his money on. With that, it's a wrap on this segment of Currency Call. Thank you for watching.